It is not the time to be throwing caution into the wind. What's up, everybody? My name is Michael Silva. This right here is Coco. You're watching the Daily Stock Market Brief. This is the show that we do Monday through Friday, 5 days a week. We use technical analysis and intermarket analysis to get a good idea as to where the stock market might be headed next. With all that said, let's get into today's show. All right, welcome back. We are looking at the market dashboard here. A couple things I want to call out. It was a lot of mixed signals today, a lot of chop. We have some small range candles that we're going to be going over, and I'll go over the reason why I titled it, Do Not Throw Caution into the Wind here. Despite reaching to all-time highs in various indices, there are still some warning signs out there, and we just need to be very careful as we're entering into specific trades. Like the ones I'm going to show you at the end of this episode that look like they have a high potential for a breakout. You know, you want to make sure that when you enter into these potential type trades that you're not whiplash right back down and then don't have, a stop loss in to manage that risk. But on the overall side here, for looking at the 11 sectors, energy down at the bottom, consumer discretionary at the top. I still think that energy here has some strong potential, and I'm in an energy trade right here. It's been probably the worst performing for the last, I think it was a few days definitely, but then also for the week and also the month. And we're pulling into an area of support right here, right around the 50 period moving average and the previous swing low right here. And this, just so you know, this is the XLE, and this is pretty typical to see these type of moves take place after large run-ups. So you can see here since February, we had a pretty nice big pull right here, okay? And now we're seeing a kind of a zigzag down. So you see this pull down, we see it bump up, and now we're pulling back down here to right around where the 50% retracement level is and right around the 38.2. So we have a good strong area of confluence. We have this previous low, we have the 50% retracement level on the fib, and we have the 50 EMA as well. So right here, if this does hold, this makes sense for a risk versus reward, and that's why I started building out a position here, is because I can have a tight stop loss below the 50% retracement level, perhaps just a little bit lower where this also candle bounced from. And then if I do catch a move to the upside and it does want to break out, for example, if I drew a trend line from the high here to down, if it started breaking out of that, with this pull, I mean, we can easily target 62 fairly easily on its next leg up. So this is all looking pretty good to see a 50% retracement with a little bit of a zigzag, in already bullish context. So we'll see if this plays out. I think the oil, we'll go into that right now, is going to be playing a big part in this specific trade that I'm in right now. First off, oil has been trading sideways now for quite some time, and now we're starting to get some really small body candles right here, kind of just fighting back and forth. You can see the bulls and bears through these wicks, kind of just rejecting and then all of a sudden buying back up. We came into the 50 period moving average today, but it got denied. And we're still here right in the center of this channel. If we break down through 57, I think an easy target is right around 54, potentially even lower. But if we start breaking out and recapturing the 50-day moving average, I think that's going to really benefit the energy sector and various energy stocks. Me personally, how am I playing this? Well, I am playing the energy sector on this pullback because I feel like being up so much for the year to date, this is a normal, healthy pullback to see, and I want to be able to catch some upside to this. It's very similar to how we positioned ourselves for consumer discretionary when it was also the lagging sector here as well. So we'll see how that plays out. Now, as far as caution goes to the wind, why am I saying that? Well, first off, let's take a look at internals as these markets continue to ramp up to new highs. So let's look at the BP NDX, okay? If you don't know what that is, just know that I use this to find overextended areas and oversold areas. BP charts are based off of point and figure charts. They look like giant tic-tac-toe boards. And when I look at the number 77, it says 77% of the stocks that make up the NASDAQ 100 are on buy signals, okay? And this is a fairly aggressive move to the upside. This can be considered an overextended reading. Then you match it down with the RSI being overbought as well. Now, things can stay overbought for quite some time, okay? I mean, just last time here, that was actually a very quick hit to the downside. But right here, it was probably around 10 days. And this one right here could have been, 2/3 of a month, or not 2/3, maybe 1/3 of a month right here. So it can stay overbought for quite some time. So you just got to be aware of that. And when we look at the BP SPX, so this is for the S&P 500, we're a little bit more frothier here than we are on the NASDAQ 100. So 73.38 is overbought. And we have a pretty overextended reading here too. 83.8% of the stocks are on buy signals on this chart. So understand what I mean when I say that as the S&P 500 moves into these areas of resistance, and then we're starting to get these overextended levels within the internals. It doesn't scream, yeah, buy me right here at this specific moment. You want to see some area of consolidation, which we'll go over those charts here momentarily. Here's the high low. I wanted to call out that we just made a pretty big run for 92 here very quickly. The last time we did that, got right up to 92 after a breakdown. We did have a pullback, so we're right up here. A little bit of a negative divergence here too, calling out on the high low. As far as breadth goes, this is the NIMO, the McClellan oscillator. And as we're reaching and we tagged an all-time high, breadth is just not supporting this move. Neither really is volume. Volume seems just like it doesn't exist at this particular point in time in the S&P 500. Here is the percent of stocks above the 200-day moving average, also a very overextended reading as we continue to drive higher here. 95.59 on this reading. When we get overextended readings, it could stay there for a while, but sometimes what you see is these little spikes to the upside, then downside. Last time we were at these levels, we got some pretty decent sized moves to the downside. So 10% correction there and 18% correction there. So just be mindful of that. And by the way, that might seem bearish, but actually this move to the upside is supporting the all-time high. So there's bullish ways to view this as well. I'm just giving you kind of, just another way to check or to view this via sentiment. Because when we do get these overreadings like this, it is technically bullish. But it also says to me, like, okay, everyone's in this trade. So that means, is the trade coming to an end? Is kind of how I view it. Now, here's the null, the new high lows. You can see here as we're pressing to a double top right here, trying to reach for all-time highs. We're doing so again with weak internals, negative divergence. If we keep continuing to push up, you can take from right over here. It would be a longer negative divergence there as well. You got the NIAD. Okay, this is the advanced decline. Internals, we're looking at only a 1 minute chart. I like to use this intraday too. It's spotted some just amazing tops while I'm intraday trading. And right here, you can see a high, a higher high, a higher high, but you see here on the internals, a high, a lower high, and a lower high. So these can be fixed. They work themselves out. If we start breaking above and you start seeing it scream higher, those can get resolved, but just call it for what it is right now at this particular point in time, negative divergence in the internals. Now let's get into some of the charts. We're going to first look at the daily cues here. That inverse head and shoulders, we broke out to the upside. We're coming up here, okay, to the previous all-time high right here. So right now it's looking pretty strong, right? We have basically just green candles all the way through here for the month of April. That really does fit the script for seasonality. And now what we're seeing is just an inside trading day. This is not bad. This is not good. This is not anything really. This is a moment of consolidation right here. And that is healthy to see, especially after we've had an aggressive move. So maybe perhaps we go sideways a little bit more and then try to take out that resistance. And then perhaps we even continue to scream even further into this month. I know this week here we have, Fed meetings, it seems like every single day, but perhaps it is Fed meetings. I'd have to look at the calendar, but it does seem like that could be, a way to potentially jawbone the market. And I know that we have CPI numbers coming out tomorrow, so it's going to be interesting to see how the bond market kind of reacts to that. So yeah, looking at this, overall bullish, consolidating right here. I'd say if we start breaking below 330 or filling this gap and heading lower, I would think that we can head a little bit lower here and potentially even retest this breakout. I don't think that's going to happen this specific week unless we get some very solid volatility spike take place. That'd be a big red candle to the downside. But we got a lot of time left in this week. Here is the IWM. I called this out the other day. Just a big kind of just topping type looking pattern, but it's definitely not confirmed like it's a topping pattern. We have a negative divergence there, momentum slowing right here, down 0.39% on the day. We could kind of argue that this is a flag right here, and we could potentially be basing out and breaking out of this here momentarily to potentially go try to take out this all-time high. And that would be very bullish. That would, keep us in this bullish context with a 20 period sloping up, 50 period sloping up. But as it stands right now, where it's at is we're below the 20 period, and the 20 period looks like it's going to be crossing below the 50, and that's going to not be the greatest sign right out of the gate, but we'll continue to monitor this. I don't see a specific trade setup right here at this particular point in time. Here's the daily for the S&P 500, overbought, and we're running into this area of resistance. The daily candle small little indecision. So I like to look at technical candles, and I'll be doing this when I release my course on YouTube. I'll be talking about how you can read it for momentum and just the psychology behind the candles here. And you can see, a big green candle, then we have just a small range right here. So it could be suggesting that momentum is slowing, and that does make sense as we run into an area of resistance. Now, remember that this run up right here, and then we had that little tiny small range candle right there, and then we just kind of crawled higher, but then rolled itself over. So perhaps we do crawl and then potentially go back test and then head higher. It's a possibility, so we can get this overbought reading back down. Or, this market could be melting up and we could consolidate a little bit more, or just perhaps get another big just green candle to shoot us over. Now we got to be mindful and careful with these big green candles or even gap ups to see if there's if a gap up would be people could potentially sell into that strength. But if you get a break above, just be mindful that it's not an exhaustion break. And we've seen those plenty times where you get these big breaks and then it sucks in more buyers and then it rips down to the downside. So you just want to monitor your stop losses as you're entering into individual trades or swing trades, investments, whatever the case may be. When I look at the 30-minute time frame, negative divergence here on the RSI. So pay close attention to that as we have somewhat of a rising wedge here too. So a lot of overbought readings, a lot of negative divergences, and then we have a rising wedge here on the 30-minute time frame, which to me would suggest that if this does hold true, we could easily break down, retouch around 409. Resistance is right around 412. Let's look to see what takes place tomorrow. We might get a gap up, and then we might sell into that strength, and then you can see it come back to try to back test some sort of area of support. Overall context, though, it is bullish. Here's the Dow Jones Industrials, another small range candle, followed previously by a large green candle right here at the upper range of this resistance. We still have this megaphone pattern. It could still be a megaphone pattern. Now, this was a flag, and honestly, if this plays to a full flag, you can take the low here to the high here and measure it from the breakout area and up. It still suggests that we could easily head to around 33,750, potentially 34,000 as well. We were slightly overbought. Now it's kind of correcting itself slightly here too. But this small range candle does suggest that momentum is taking a little bit of a pause here. The next one I want to go over is gold. Gold broke out, saw a weak day today. It could be coming back to back test. The 50 period held as resistance. So this isn't the greatest sign so far for gold, but it's still above 1700. So this could be all very, very good for gold. This could be somewhat of a bottoming type pattern. We will see. It would be nice to have 1700 hold though, and then you could kind of continue to make these higher lows building. But right now, it's still swimming up a river, so we'll continue to monitor it. Silver broke out of this falling wedge, but now it's quickly retracing. Pretty big down day today, down 46 cents, lost 1.81%. Right there, right at about the 200-day moving average. So this suggests to me that there easily can be some more downside, but we gotta just watch this and monitor it, because right now there's not really the greatest trade setup at this particular point in time. However, if that we start catching bids in both gold and silver, if we start seeing the dollar move lower, which we'll get into that chart, that could be a very, very good sign for miners, for gold, and for silver. So I'm looking at this trade here in the very near future. I'll probably put out a separate video on how I'm going to be approaching the precious metal markets here very soon. The next one I want to go into, you know what? I forgot to put out a dollar chart. I guess that's okay because there wasn't much movement there anyway. But I want to pay close attention to Bitcoin. Bitcoin, what I found very interesting is, posted this on Twitter too, this ascending triangle right here took just over a month to build. And what we're seeing here is a very similar type ascending triangle. Now, during this ascending triangle, momentum was sloping down. During this one, it's sloping down here too as well. On the breakout, it was just a solid breakout. I remember posting on Twitter saying, okay, it's just a basic technical breakout, but within an hour, it just kept on roaring. And then I had to say, I was like, wow, that is one very strong breakout. And it never even retested. It just kept on screaming higher and higher. So if this breaks out with this kind of momentum, why couldn't we go reach 75,000 very quickly, potentially even higher? So I'm going to be continuing to monitor this. I would buy a breakout, and then I'll just monitor a stop as time goes. So, but I do like it overall. Bullish context. Bulls are stair stepping up. Momentum is the only thing that kind of scares me, that is really kind of flattening out here. But you can see the price is also flattening out. But then also if you measure from down here, it's putting in higher highs in the price action and sloping lower here on the price percent oscillator. So it's going to be an interesting just how this plays out. I say the high we got to take out, 62,500 I'm going to call it. And if we start breaking above there and get some confirmed breakouts, I think all systems go. Just be very careful that we don't break out and then all of a sudden retrace and then just have a nasty, shooting star type candle. That wouldn't be the greatest. But I do like how it's consolidating here within this pattern, because that just tells me that more energy is building, which means an explosive move is here coming in the very near future. Whether that explosive moves to the downside or the upside, I don't know. But I like the risk versus reward, either way you look at it. Now it's time to go into power charts. We're going to go ahead and go through these fairly quickly. I got 1, 2, 3, 4, 5, 6 charts to go over. And I want to just kind of walk through my thought process on these. I was looking for charts that were in bullish context. So you're going to see the 20 is above the 50 and that's above the 200. They're sloping up. But I wanted to point out that they're in this period of consolidation. So my idea around this is to wait for a breakout, a confirmed breakout, and then I'd be buying in. So I can put like a buy stop order for above $33 here. This is ticker symbol MIC. What I really like about this one is look at just how indecisive this move was right here, but we saw a big increase in volume. So that kind of just makes me go, I wonder what's going on here. Perhaps this could be setting itself up for a move or a breakout here in the very near future of 33. Now, I do like the higher lows, and I just like this area of consolidation that we're in. The only thing that kind of makes me worry a little bit is just the price percent oscillator is also sloping down, so momentum is slowing right here as well. So that's just something to take note of. Here's GPC, auto parts retailer, I believe this is. There's actually the auto parts retailer sector actually has some just amazing charts right now, but I just like this area of resistance right here. It's consolidating very tightly from a nice big move. So a big breakout with strong volume supporting it, a break above 119 could send it for a very similar type move continuing up. So I really like this. I'd be putting a buy stop in just above 119. I don't know if it's going to break through tomorrow or, the next day, or if it's even going to break through. So I want to kind of monitor it. So I just wanted to get it on your watch list so you can be aware of this chart as well, because it is quite a nice one. Here's WRK, Westrock Co. This one gets pretty gappy, so I'd suggest being very careful with this, but it does look like we're starting a breakout here. We had 3 nice days of volume accumulation comparatively to the previous. So this could have been a flag pull right here, and then we started building up the volume and we're breaking out of 54. So this could send us on another leg higher too as well. Just be very mindful that it gets pretty gappy. So, if you have a stop loss set under 54 and you gap below 52, your stop is going to get triggered at that range. So just make sure that you're sizing up your position to be able to take a few dollar loss if you do get stopped out here. Here's OXM. I like this one. This one looks like it's breaking out of an area of consolidation here too. Bullish context. I think I'm going to be watching this tomorrow, because I think actually a really easy target is this previous all-time high right around 95. We're at 90 here. That's a $5 per share move. So this should be on your watch list going into tomorrow's intraday trading. The price percent oscillator here is looking like it's going to do a bullish crossover too. The breakout right here, it's not supported by the greatest volume, but the previous 2 days did have a lot of volume. So I'd like to see a little bit more volume come in, and I'd even like to see a break above 95, because that can push us even higher. So I like this setup. Here's DBI, Designer Brands, traded on the NYSE. Nice kind of just, pull right here, and now it's flagging, consolidating. Not much volume supporting it, but a break above 1850 would suggest that, hey, this thing could have some more legs to press higher. So look for a break above 1850 with some solid volume. Bullish context overall. I'm really liking this one too. And then the last one is ticker symbol ARD. Look at tight period of consolidation. We broke out of here. It looks like it's easily going to go tag that 2750 high. If you wanted to be patient and see if we can break that all-time high to get another pull there higher, I'd say buy stop orders above 2750, and you want to see a break with some strong volume. This breakout of this small tight consolidation is being supported by some nice volume, as the price percent oscillator is trending up here too as well. It looks like it's going to have a bullish crossover. So keep this one on the radar as well. It's looking pretty good. Now, one thing that I want to wrap everyone's head around is just pay close attention to where the overall markets are, and why I started this entire session off saying, don't throw caution into the wind. Because if you throwing caution into the wind, what do I mean by that? I mean, don't ignore the risks that are very real. Okay, where the market's in a very euphoric state right now, and you want to make sure that if you're getting into certain stocks or trades or whatever the case may be, that you're not oversizing your position for one, and then two, not paying attention to when you'll exit and when, like as far as profit targets go, and then when how your stop loss is going to be set, either at a certain low or per dollar per share loss or whatever the case is, and that you're also having an idea where you're going to be moving the stop loss up to get to that break even point to potentially have the market even scream higher. So that's all I got for you on today's episode. See you later.